right, let's see. All right, good evening, everybody. Hope you are having a good start to your June. I can't believe it's already June. So June 1st, 2023, we are officially pretty much halfway through the year, which is kind of unbelievable, but we'll just have to roll with the punches. Now, I want to do something a little bit different today. I know I said we were going to do a deep dive into Salesforce earnings. Obviously, they reported yesterday. So did CrowdStrike and Okta. However, I think I want to bump that stream to tomorrow, and I'm going to spend the majority of tonight sort of reviewing where we are and where we are going in terms of the economic environment. Economic indicators are showing and telling us, and trying to project that forward to the next FOMC meeting, which I believe is on the 13th. Is that correct? I think the next FOMC meeting is going to be June 13th through the 14th. Now, as a quick review, the Fed fund target rate right now is right at 5% to 5.25%. And if you look at the futures market right now, so as of the close, traders are pricing in about a 35% probability, or 35% likelihood, that we get a 25 basis point rate hike at the next FOMC meeting. If that's the case, that's going to bring the Fed funds target rate to a range of 5.25% to 5.5%. Now, there's also the other side of Wall Street and Main Street that believes that we are going to have a pause. So at the next Fed meeting, again on the 13th to the 14th, many people believe that the Fed is going to hold tight so they could assess additional economic data that comes in, and then maybe go with a 25 basis point rate hike in July. So we'll talk about that tonight. We'll talk about some of the leading economic indicators that have come in, which essentially leads us to believe that the Federal Reserve should actually raise interest rates at the next meeting. And then maybe we'll give an argument, sort of play devil's advocate as to why they should sort of sit tight and pause on their rate hiking cycle. Then we're going to talk about the Institute for Supply Management PMI numbers that came in today. So as we know, everybody, is a quick review on the first business day of every single month. The Institute for Supply Management releases their PMI numbers for the United States manufacturing sector. So we came in worse than many of the economists on Wall Street expected. The manufacturing sector of the United States fell into contraction territory for the 7th straight month in a row, coming in at a reading of 46.9% for May. Now, if you think back to the April reading, PMIs came in at 47.1. Now, generally speaking, a reading above 50 signals expansion. Oh, we'll get out of the way of this guy. Signals expansion in the manufacturing sector of the U.S. economy, and a reading below 50 signals contraction. So we are in contraction in the manufacturing sector. Tomorrow, I believe we are going to get the services numbers out. But if we look abroad, if we look to the manufacturing sector in China, it's not that much of a better picture, right? Even though the zero COVID policy in China is all but over, we're not really seeing that big of a recovery. So we'll talk about that. But most importantly, everybody, we are here reporting live from Central Park South on the corner of 7th Avenue. If you look all the way down 7th, you'll actually see Times Square. What I think I want to do tonight, I want to go back to the Upper East Side. And we're going to look at some of the retail vacancies up there. We didn't really get too much time to explore it last night, so I feel it'd be appropriate to go back again tonight. So let me say hello to everybody in the chat and we will get started. Hopefully everybody is having a fantastic start to their June. Today is June 1st. Hey, Dan Zhang is here. What's up? Conrad M, NJB. I see D. Buy the Book is here. Pogo is joining us. Anthony Williams. Happy Thursday to you, sir. I see my friend British Gray from Tampa, Florida. Always a pleasure to see you. I see our good friend and moderator Patrick, New York. Tom Barry is here. What's up, Tom? Always a pleasure to see you. Sunshine after rain. Good to see you. Dan says, what a time to be alive. Good to see you, Dan. Hey, another good moderator and friend DM is in the chat. Lena Sandoval's here. Jay, welcome. KK is here. Says, good evening, Tom, in chat. I see my friend TC says, Tom, thank you for the tip for Demodaran. Yeah, Professor Demodaran, fantastic individual. The Austin Tennis says, Tom, I'm disappointed that I didn't see you ask questions during our earnings call today. Yeah, I was not on there. You know, I didn't even know PagerDuty was going to report earnings today, to be totally honest. But let me tell you this, Austin Tennis, hopefully it was a good report. I didn't even know you guys were reporting, so my apologies. Now, I will tell you this, okay? Our good friend Austin Tennis made the very brave transition from investment banking to tech sales. So I got to give him a ton of credit there. So as an account executive, a newly minted account executive selling software, closing big deals, I'm sure the revenue growth is coming in better than expected, let's just say that. We were outside the New York Athletic Club tonight. Now, I think there was a major event going on here today. There was a ton of military members here. There was people from the Air Force and I believe the Navy. There was tons of people lined up out here at the New York Athletic Club. I think today may have been the graduation for the Air Force Academy, maybe, I think. So a lot of activity going on here, military activity. Brian says, good evening, Tom and team. What's up, Brian? Welcome. You know what? Before we head to the Upper East Side, I actually want to make a left right here. I want to show you guys one of my favorite buildings. It's very unique. It's called Alwyn Court. Alwyn Court. And I want you guys to notice the architecture on the building. It's so beautiful. So we're standing on the corner of Central Park South and 7th Avenue. Here you'll see the Trump International Hotel as well as the Deutsche Bank Towers. And today was the second day of the JP Morgan Chase corporate, what was it called? The Corporate Challenge. So you have a lot of corporations, particularly in the financial sector, so a lot of the hedge funds in New York, the investment banks, you know, financial firms and the like, and other big corporations, they get together to do a little bit of a race. I think it's a 5K, maybe a 5K or a 10K, I'm not too sure, in Central Park. There was tons of people in the park today. It actually looked really cool. Hey, Dan says Apple made a great device. Yeah, they did. Indeed, they did. Dr. Longus is here. Says, hey, Tom and team, what's up? Good to see you guys. Now, right on the corner of West 58th Street and 7th, you'll find one of the most unique buildings in the city, in my view. This is called Alwyn Court, and it looks 10 times better in the daytime, I can promise you that. If you guys, you know, click any of the links in the descriptions, I tend to post a lot of videos of this building on my Twitter page, but it's really, really unique. Sort of gives the nice contrast between old New York and new New York. I see Sally in the chat. So as we point the camera up towards the top of the building, you'll notice the stark contrast between all of the Billionaires Row buildings. This is 157 right here. Hey, Sparks Carnival says Amazon is starting to compete with NVIDIA to develop chips for next-gen AI. Amazon has deep pockets. Should NVIDIA worry? You know, Sparks Carnival, I was reading a really good article, and I'm not sure if you're on Twitter. I was going to send it to you, but I don't think you have a Twitter profile page. But if you go to my Twitter page, I retweeted the article by an individual that goes by the name of Jim Osserman. And he's a really successful money manager, I believe, from London. However, he moved his firm and his family to New York. And he wrote an interesting article about spin-offs and the potential, right, the possibility for Andy Jassy, who is the CEO of Amazon, to potentially spin off the Amazon AWS business from Amazon's core business. Now, I don't know if that's going to happen or not, but the article was really good about outlining why spin-offs generally tend to happen towards market bottoms. So I think that's a good article for you. I know you've been bullish on Amazon for months now. It's a pretty good call, really good trade. Probably made some good money there. But yeah, if you look at it, I retweeted the article. I think that's like a perfect article for you. All about the possibility that they spin off the business, that very lucrative AWS business. So here we are, this is engine 23, but you have the iron gates that are closing at 220 Central Park South. We had a record deal close here over the Memorial Day weekend. It is under contract for $75 million. I'm not sure the exact unit in the building, but if I had to guess, it's probably a couple floors below where Citadel Securities' Ken Griffin owns about 4 floors of this building right here. Eric says Amazon will never ever spin off AWS. I've worked with them for 13 years. Culturally not compatible with Amazon's values. Yeah, Eric, since you're probably a lot more in the know on this than I am, I don't really have an opinion on it. But you should read this article because this particular gentleman has a really, really good and successful track record on Wall Street. I think you'd find it. I think you'd find the article intriguing, even if you disagree with it. But we'll see. Michael Joseph says Google has the new Tensor chip that's for AI and is better than NVIDIA's. Now, another thing is a lot of times. Let me catch up on the chat. Yeah, TC says, wow, think about the realtor's commission. Now, from my understanding, the larger the deal size, usually the lower the percentage, obviously, right? So let's say you have, in this instance, a $75 million deal. It's not going to be a 7% commission, right? It's probably maybe even going to be 0.5%. That would be insane if it was a 7%. Usually in like the suburbs, in places where you have the median home price going for $500,000 and less, you'll have the 7% commission. But in a city like New York, where the average sale is higher, right, especially as you service the high net worth and ultra high net worth individuals, you don't really get a 7% commission. It's usually a little bit lower, maybe 2-3%, but on monster deals like that, it's probably 1%. But hey, Bill says, yeah, it would be far below 6%, which is split anyway. I was a realtor, large deals tend to be 1 or 2%. Well, that's good. That's good data. I mean, that's still a lot of money. I mean, don't get me wrong. Trust me, I would not be complaining if I was the realtor that closed that deal. I mean, massive, massive compensation there, which rightfully so. I mean, working on those big deals, there's a lot of moving parts, that is for sure. But what I wanted to do before I sort of get sidetracked here, we'll go back around and we'll do the loop of Columbus Circle. This is 1 Central Park West. Now, the listing all the way at the top, I think the top penthouse is actually on the market. The Alexander team, I think, has the listing. They were one of the most successful teams at Douglas Elliman. I think they spun off to their own brokerage. but there are two brothers, I think Tal Alexander. I think they own the listing up there. But anyway, so guys, now that we're in June, what we have to look forward to over the next 2 weeks is the next FOMC meeting, okay? And that is set for June 13th through the 14th. Now, many of the Fed presidents, including Minneapolis Fed President Neel Kashkari, has said he would be in favor of pausing the rate hikes at the next meeting, but he would not be in favor of cutting. So I think we could pretty much all agree that a rate cut is totally out of the question for the next Fed meeting. As of now, I think it's about 50-50 whether we'll pause or not. I think it's all going to depend on tomorrow. And tomorrow, that's when we get the non-farm payrolls out. And if you remember correctly, Fed President, I should say New York Fed President John Williams came out a couple months ago in a Bloomberg interview and said, in his view and in his opinion, in order for him to support material rate cuts, the unemployment rate would need to at least increase to 5%. Well, here's the problem. Over the last couple months, unemployment has actually gone the opposite way in the United States. I believe the unemployment rate in the US is 3.4%. Now we're gonna get an update on that tomorrow. Let's get out of the street, we got the ambulance coming. Now we're gonna get an update on that tomorrow, right? As we get the non-farm payrolls. I think we're away from the ambulance. So tomorrow we're going to get an update on the non-farm payrolls, right? And we're also going to get an update on the unemployment rate. And I believe if we come in extremely, extremely hot as it relates to non-farm payrolls, so if we get a huge explosive payroll number, a jobs number, that's going to shift, I would say, move the pendulum more towards we need a rate hike. And if we look at some of the data that we've gotten over the past week as it relates to the job market, numbers have actually been coming in better than expected. I think one of the things that we could look at is the job openings report that just came out, I think yesterday or 2 days ago now, in the United States, which is kind of crazy to think about, right? Because you see in the headlines all of these layoffs in big tech. You're looking at the manufacturing PMIs roll over and decline. So there's a lot of negative sentiment out there. We talked about the Goldman Sachs Small Business Sentiment Survey, which is at all-time record lows, and consumer confidence is declining and is at an all-time record low. However, still in the United States today, firms are looking to fill about 10.1 million jobs. So there's 10.1 million job openings in the United States right now, which is pretty impressive, right? So generally speaking, for people who are unfortunately unemployed for one reason or another, the good news is if we look at the data, there's job openings, there's jobs available. Firms are hiring, people are hiring, but again, if we dig a little bit deeper, if we go back to last month's non-farm payrolls, there's very specific sectors of the economy that are driving a lot of that job growth. And before I even say it, you guys already know, we've gone over this to the point of ad nauseum, but there's a lot of job growth in hospitality right now, right? Hoteling industry, transportation, restaurants, right? Sort of service level, service sector economy is booming. The job growth and the job openings are really, really high. However, maybe one could argue that there's not a plentiful amount of job openings where it is, a lucrative career, perhaps. to sort of play devil's advocate. So I don't know, what are your guys' thoughts on that? I could sort of speak to the job market here in New York, but we have an international audience and a national audience here on Walks on Wall Street. So what are you guys seeing? Are you hearing that, let's say if you work at a firm right now, work at a company, are they planning layoffs, right? Are they starting to trim fat in the organization, or are they looking to hire? Sort of what is everybody else seeing out there in the economy? Hey, Ryan Beck says, I'm not sure what the turnover level is, but I'd imagine it's pretty high percentage. J-Rose says, you nailed it. Hey, everything in Miami's here. What's up? Good to see you. Dan says 208,000 jobs created last month. Of the 278,000 were in leisure and hospitality. Yeah, Dan, you're right. So, hospitality and healthcare too. Healthcare seems to be pretty robust. Hey, Evan Weeks, what's up? Good to see you. Michael Joseph says it's amazing. You can find the same amount of good news versus bad news about economic conditions. That's true. Hey, we have Johnson is here. Says hello, Tom, watching from India. You know what? I had a good conversation with a really good friend of mine the other night. We're gonna head to the Upper East Side now. But I had a good conversation with one of my friends, and we were talking about India specifically and how we are very optimistic and very bullish on the Indian economy. Now, those are our beliefs, right? But they are backed up in fact. Does anybody want to know what major piece of economic news that we got out as it relates to India?
Oh my goodness.
Anybody want to guess? Well, if you don't know, that's fine. That's okay. I'll tell you. That's what we're here for. So we got GDP numbers out for India, and India's GDP expanded by 6.1% in Q4. That's a blow the doors off, blow your face off, rip your face off number. That is a huge, huge number coming out of India. If you look at full year, fiscal year GDP growth for India, it came in at 7.2%. That's phenomenal, okay? That is really, really phenomenal. And one of the reasons why I believe this to be true is you're starting to see companies globally diversify supply chains away and diversify manufacturing capacity away from China. And this has been a trend that has started to happen after COVID, right? Because you can't have, I don't think I really need to explain it. I think you guys are smart enough to sort of pick up what I'm putting down. You can't have your whole supply chain based upon one country, where if they flip the switch and turn everything off, that's going to create bottlenecks in the supply chain for 3 years, and that's exactly what happened. So you're starting to see big companies like Apple remove manufacturing capacity away from China, make very, very big bets on India, and I think they are going to have absolutely explosive economic growth over the next decade. Now, if you read the statement, the Indian Central Bank actually made a big statement, and they said that they're going to raise their GDP forecast for the current fiscal year. Now, previous forecasts were, I believe, about 6.4% for GDP growth for India. They raised that to 6.5%. So that is some really, really strong numbers in the midst of essentially a global slowdown in manufacturing capacity. Yeah, Junior says India and Mexico. Agreed. Hey, FredX, what's up, man? Good to see you. Sunshine After Rain says I'd give up nursing to be an airline stewardess. Interesting. Sunshine After Rain, you think you would want to do a complete career change from being a nurse to being a, flight attendant? I mean, it would be a really interesting job, right? You essentially get to fly all over the world, depending on which airline you work for, all over the country for free. I think I would do it too. Hey, Ed Dunkel says it's still only around 3 trillion. They have a very long way to go. Well, I think that's where the alpha is probably going to be generated, right? Perhaps. I don't know. I think the way that I think about it is, I think I was wrong about the Chinese recovery. And I've sort of said that on the live stream. If you remember back before they lifted the sort of the zero, I guess you could call it the zero COVID mandate, I said, look, you know, Chinese stocks were rallying at the time. Maybe this is the market telling us that once this zero COVID mandate is lifted, there's going to be a massive amounts of economic growth. Now, I made a huge mistake, and I was sort of rereading a particular part of one of my favorite books of all time. I was rereading it actually today due to the fact that the late, great Bill O'Neill unfortunately passed away over the weekend. And one of the biggest rules that Bill O'Neill had in how to make money in stocks, it's the rule. Well, let me adjust. I got to adjust my microphone. All right, maybe that's a little bit better. So the rule, if you've read How to Make Money in Stocks, Bill O'Neill was always about stay away from Chinese equities. Generally speaking, stay away from emerging markets. There's more than enough opportunity in the United States. And a big reason why I've sort of, which I was totally wrong about, haven't really listened to that advice is because you read all this research from experts and analysts, and you see the massive total addressable market. You see the opportunity in China. But we don't know if those numbers are real, actually, right? I think that's fair to say. You know, a lot of Chinese companies, especially publicly traded companies, are not held to the same standard as companies here in the United States as it relates to, you know, SEC rules and regulations and disclosures. So I think in addition to all of that, I would say the lack of transparency in financial reporting. You know, we got the Chinese PMI, right? The manufacturing PMIs out, I think it was yesterday in China, and manufacturing activity fell off a cliff. Chinese manufacturing activity came in at 48.8%. And we don't even know if that's really a real number. It could be worse than that, right? So I don't know. You know, I think over the next decade, the United States, Canada, Mexico, and India, I think, are going to be the main economies that benefit, in my view, right? We're already seeing this. We're seeing companies try to reshore their supply chains to North America. And I think that's going to, hold on, I'm trying to navigate this stoplight here. Everybody has a red light. All right, we'll cross by the plaza. This is a little wonky intersection. But anyway, yeah, I mean, I think North America in general is going to do really well. I think Canada is going to do really well. I think Mexico is going to do really well. Look at Mexican equities right now. We won't get into individual equities. If you just want to look at the ETF of Mexico, the iShares Mexico ETF, EWW, it's been performing really well. So I don't know. Hey, Bree Grams, what's up? Junior, I did not get a chance to walk past Bryant Park yet. All right, everybody, we are now outside the Plaza Hotel. Wabi says, oddly enough, my broker just suggested emerging markets, specifically China. I told him no thanks. Ed Dunkel says, yeah, gap in China is definitely iffy. And I think Ed would know probably better than anybody else, right? I think Ed's an accountant. Hey, Ren 1018, thank you for your support. God bless. Stephen Bates says Canada will do well in what? Trudeau is leading Canada downhill. Yeah, well, I think politics aside, right? I'm not the biggest Justin Trudeau fan either. But I think you need to, I always say, start with a global macro approach. What is the best, or I should say the fastest horse in the race? I'm sort of stealing that term from Paul Tudor Jones. Paul Tudor Jones always says that. He always says fastest horse in the race. Ever notice that? I've probably watched every single Paul Tudor Jones interview ever put out. And he says that constantly in every interview. He's like, we're looking for the fastest horse in the race. Anyway, so if you look for the fastest horse in the race, you know, what would you rather invest in? You know, I was even reading a piece, people were getting bullish on, you know, Russian stocks. Really, you want to be investing in Russia? Just think about all of the turmoil in the world, all of the economic and political instability, and it doesn't make it makes Canada look like a bed of roses, essentially, right? It makes the United States look like a bed of roses, even though we're not. But it's sort of like, you know, what is the least worst option? All right, let's cross the street, get away from this. Wow, guys, this is a really nice view from here. Check that out. You can see the Steinway Tower. This is the skinniest residential apartment building in the entire world right here. Hey, Lemonade is here. What's up? Sparks Carnival says absolutely not in Russian stocks. Ryan Beck says, why not go with Japan over China for that exposure then? That's a good point. Now, didn't if you look at the Japanese stock market, didn't it just break all-time record highs for the first time since the 1980s? Think about that for a moment, everybody. I think it took, they're doing some major construction here. Oh, they're crushing the pallets. You know, I'll tell you a quick story. I know a company on Long Island that manufactures these pallets. It's like a 1 or 2 man shop, and they make a fortune off of making these little pallet things. Anyway, so let's make a left on Madison Avenue, and we'll head further into the Upper East Side. Now, I want you guys to notice the retail storefronts as we walk the Upper East Side. You'll see a lot of vacancies. This is 432 Park Avenue right here, one of the Billionaires Row buildings on 57th Street. Yeah, Keith, you're right. Keith says you never really see lights on top of the Steinway building. You never really do. Now, I think some of the units are actually still being built. Some of them. But to your point, a lot of these ultra luxury, massive Billionaires Row apartments, oftentimes the owners don't even live in them. I'll give you guys a perfect example. So remember how we were talking about Tal Alexander, one of the best real estate brokers in the business in New York and in Miami now? I believe he's the one who sold the top penthouse right here at 432 Park Avenue, I think for just under $100 million. Now, they sold it to a Saudi oil tycoon, right, multi-billionaire. It's now back on the market for I think about $20 million less. They're trying to find a buyer for it, but here's the crazy thing. The owner's never even been in the building once. Yeah, not once. Some people treat ultra luxury real estate in Manhattan and in Miami and all over the world, right? Paris, you think about the biggest cities, the most desirable cities. They sort of treat it like buying art, buying a very unique one of one piece of art, a trophy apartment in the sky. right? It's kind of crazy to think about, but it's true. Imagine buying a near $100 million apartment and you never even are curious to go check it out one time. I don't know. I feel like if I bought that, I'd keep that as my primary residence. But anyway, hey, Steph UH, what's up? All right, guys, so it's starting. So we're starting to make our way into the Upper East Side. And after the pandemic, there's been a lot of retail vacancies here. Now, the city's become very divided. Soho actually has some of the lowest retail vacancy in its history right now, which is good news. But the Upper East Side is a different story. You're going to see a lot of these very beautiful buildings, and it's really a beautiful neighborhood on the Upper East Side. But you're going to see a lot of retail vacancies. You're going to see a lot of storefronts that are empty, unfortunately. So we'll try to count them. I'll try to keep tabs myself. We just saw one. Hey, TK Porsche says that's a sound way to diversify across asset classes for political and global geopolitical risk. That is a fantastic way to look at it, my friend, a fantastic way to look at it. Now, I have a really good friend who's one of the top real estate brokers in Miami, and they've actually been seeing a huge wave, and now this is nothing new, right? But they've been seeing a big uptick in buyers from Argentina buying really nice buildings, particularly in condominiums, right? So you don't have to do any maintenance, you don't have to do any upkeep. And they're not really doing it to speculate in the real estate market. They're just doing it to move some of their assets and park some of their money in the United States. I mean, we talk about inflation, right? I mean, we are going to get here from the Federal Reserve, number 2. So we got 2 so far, team. 680 Madison Avenue, luxury leasing opportunities available. You think about inflation. Everybody's freaking out about inflation in the United States, and I agree, it's horrible. Okay, I think we need to get really, really serious on crushing inflation. I'm not trying to, divert away from that, but I think we need to keep perspective. We just brought up Argentina. Does anybody know what the annualized inflation rate is in Argentina? It's 101%. Think about that for a moment. How do you operate like that? So even though, this is number 3, 695 Madison, another vacancy. Even though the United States has its problems, right? We're seeing inflation globally. You have parts of the world where inflation's running above 90%. That's a real risk for some people. So I think the investment to maybe get some of your money stateside maybe is not a bad idea. All right, so this is the second, you'll start to see really beautiful streets. The Upper East Side, you'll notice, is more clean, I should say, than the Upper West Side. Not to say the Upper West Side is dirty, I'm not saying that. But you see everything is very elegant here. Everything is very well put together. It's like nothing's out of place. But you see a lot of vacancies. And the boutiques that are here are very, very high-end clothing retailers, or they sell very high-end makeup or handbags or eyeglasses. You kind of get the picture. That is the whole Upper East Side vibe. Hey, Sparks Carnival says, what is going on with SoFi stock? I really wish I caught that train. I don't. SoFi is one of those SPACs. It's, I believe it was a special purpose acquisition company brought to public by Social Capital, I believe, which is Chamath Palihapitiya's firm. Now, the vast majority of SPACs, or the special purpose acquisition companies, we actually did a really good job on this stream together collectively as a team to sort of call out this whole SPAC mania 2 years ago now as a fraud. And I think it's appropriate to say that. Now, I have to say allegedly just so we don't get sued, but there was another article came out in the Wall Street Journal that details the only people who made money in these SPACs were either the institutions and the investment banks who made a killing on the fee income bringing these things public, or the insiders, right? So you could think about the early stage investors or the founders of these companies dumped massive amounts of shares onto retail. Now here's why I think the special purpose acquisition companies are extremely unethical. Because there's different regulations. They're regulated differently than a traditional IPO or a traditional initial public offering. Mainly in the realm of the financial forecasting of these companies. So let me explain sort of what that means as I give you guys a look at some of the architecture of these beautiful buildings here. Now, SPACs are a little bit more lenient in terms of what these founders and the owners of these companies can forecast in their financial reporting. So when I was looking at a lot of these companies, like just all of the nonsense SPACs, pretty much all of them are trading way below or just gone out of business so far. They forecasted sales and earnings growth that were obviously never going to materialize. Like just blatantly obvious. But a lot of pension funds ate this stuff up, unfortunately. So there was a lot of salesmen on Wall Street selling placements for these special purpose acquisition companies to pension funds, and now there's a lot of litigation going on there. So, oh, here's another one. I think this is number 3. Another vacant retail space here. And this one is actually really, really nice. Look at that. It's a nice space. It's sort of like a boutique style store, isn't it? Very nice. But yeah, that's my main issue with the SPACs, is because it allows for the companies to put out these falsified, in my opinion, this falsified and pie in the sky, unethical numbers of what they're going to do for sales and earnings. And if you look at the data, not even 5% of any of those SPACs met even within 10% of those forecasts. So it was all a massive money grab, right? That was spurred by massive amounts of liquidity sloshing through the financial markets, because obviously during COVID, the Federal Reserve dropped interest rates to near zero, printed a bunch of money, and there were definitely some opportunists on Wall Street that took advantage of that. This is an awesome view, looking directly down Madison Avenue. You could see the top spire of One Vanderbilt. We're on the corner of East 64th Street. This restaurant looks really nice too here. Hey, Ken Brockton says SoFi is large in student loan lending and may be benefiting from anticipated resumption of the student loan payments. Yeah, so Ken, maybe you know a little bit about that. I'll pick your brain about that for a moment. So I believe the Senate just voted on the new debt ceiling bill, right? And I believe it passed. So assuming that passes and all goes well, student loan payments will resume, right? Because they were in forbearance because of the COVID pandemic, obviously. So I think once this bill passes and the debt ceiling debacle is resolved, I think one of the key components in that is student loan payments will resume. Is that correct? Now, I was reading an article, and I believe the median student loan payment in the United States today is right around $250 to $260. Now, that's pretty significant, right? If you think about consumer spending in the United States, if the average student loan balance, or I should say the median student loan balance, is $19,000, and nobody has been paying the $250 a month because it was on forbearance, what's that going to do for consumer confidence levels and consumer spending levels when people wake up one morning and they get a letter in the mail from the lender to say, hey, payments are starting to resume, I think a lot of people are going to get caught off guard by that. Any thoughts there, or any maybe personal experience? Maybe some of you have student loans or have friends who have student loans. Do you think that's going to be a big impact on the economy, or do you think it's going to be a non-issue? I don't know. Ken Brockton says, yes, part of the debt deal is payments will resume since the pandemic emergency is over. Cash flows here. Good to see you. Cash flow, this is Tom. Good to see you. Now look at this boutique here. Jetstar says no impact. Ryan Beck says 3 years is plenty of time to be prepared. It definitely is. I mean, if it were me, I would have probably knocked out that student debt over the pandemic. Now, I'm blessed and very lucky and very fortunate to not have had student loan debt. But here's what I understand from the student loan forbearance. I believe the interest is on pause as well, is it not? So not only did you not have to make your student loan payments. Oh, I think this is the relocation of the Versace store. Everybody remember that? Guys, remember we were walking down Fifth Avenue and the Versace store, the main flagship, is no longer on Fifth Avenue. This is the new location. It's so funny we're walking by it right now. Now, I'm not a big luxury purchaser, I guess. But I don't know, I think the store is a little bit it's a little underwhelming, isn't it? I mean, in comparison to the Fifth Avenue flagship, would you guys say? Okay, so everybody in the chat is saying that is correct. There was no interest accruing during that time. Now, if it were me, if I had the student loans and it was on forbearance and there was no interest accruing, that is the perfect opportunity to attack the hell out of that debt and knock it off, because there's no interest accruing, right? So you could throw your whole paycheck at these student loans and probably knock it out extremely, extremely easy, because you're not paying ridiculous amounts of interest. I don't know, that's what I would do. Here's another vacant retail space here on the Upper East Side. You're right. So Ryan Bex is very similar to people taking stimulus checks even though they didn't need it. Hey Jay says, good evening Tom, I hope you're having a wonderful evening. I am. It's a beautiful night out here in New York. Not too hot, not too cold. You know what? It actually looks like this just rented. This is actually really good news. Looks like there's going to be a cafe here. Match 65. Well, that's actually really encouraging then. Hey, Joseph Hardaway, what's up? Look at this. So you see these buildings here? These are some of the original sort of townhome style buildings. And you're actually seeing a lot of them be redeveloped. This one in particular on the corner looks like they're resurfacing and redoing the entire thing. And this is going to be a brand new residential building right here. Really nice. Hey, Dr. Longus, what's up? Christine says, I wish the weather was great here in California. We are still with this cloudy and 60-degree weather. You know what? I don't understand California, because the weather has just been so crazy. And you know what? I'm glad you brought that up, because this is another topic I wanted to run by you guys, which is going to impact the markets in a big way. Did anybody see the news that Allstate Insurance is pulling out of California? Did anybody see that? Now, they're not going to dump the existing insurance policies on the homeowners. Oh, excuse me. Sorry about that. Now, they're not going to cancel existing homeowners policies, but they're not going to write new policies in the state of California. And we've sort of talked about the reasons why. This is a beautiful building here too. Now, California particularly is at a huge risk for, natural disasters, unfortunately. Wildfires, forest fires, and the like, suffering from droughts. However, over the past year, California has actually been rather rainy, and I think their drought problem has been solved. But I think you're going to continue to see this trend, particularly in states that are very prone to natural disasters. Now, if I had to make a prediction, I'll give you guys my prediction of the next state that is going to have a lot of these problems as it relates to insurance companies just choosing not to write policies and do business in these states. And I think that's going to be the state of Florida. Now, it's for different reasons, right? Because California is also a political reason. There was some legislation that was passed. I think this guy's trying to turn. Hold on. I'll get out of his way. Now, there was some legislation that was passed that does not allow insurance companies to model risk for the future, right? So, for example, let's say if a home on XYZ Street in California that is not susceptible to wildfires, but as the insurance company consults with meteorologists and scientists, they try to forecast the probability that maybe a forest fire will be prone to the neighborhood in, let's say, the next 5 years. You're not allowed to do that in California, which is just crazy. So how are the insurance companies going to be able to hedge for their risk if they can't use modeling to forecast into the future to say, hey, this particular neighborhood is not at risk of a wildfire today, but due to climate change and other reasons, maybe in 5 years it will. So we need to raise the premiums in this neighborhood. They're not allowed to do that. So I think that's going to be a big blow to the property market in the state of California. And I do not think Florida is, I don't think Florida is going to be spared. I think there's going to be a major issue in terms of homeowners insurance in the state of Florida as well. Hey, Christine says this has been a trend with insurance companies here in California. Geico Insurance also pulled out of California. Wow, I didn't know that. I didn't know Geico pulled out. Here's another vacant storefront for you guys. Another vacancy. You know what? I'm not sure who said we never see any lights on in the Steinway building. There's some lights on right now. I think the top portion of the building is actually, I don't know the exact name. I'm not an architect. We actually have one of the architects who designed the building watches the stream. But I believe at the top of all those billionaire row buildings, there's these massive weights that is used to counteract the building swaying in the wind. Does that make sense? So they have this big, massive, like 1 ton or 2 ton weight that moves back and forth with the building to counteract and balance it out. It's really wild. I was watching a YouTube video on it. I believe it was Architectural Digest, I believe. Crazy how they engineer those things. Yeah, Jetstar says not many companies offer insurance in Florida. Now, I ran into that problem. Even though the state of Florida is a beautiful state. I love Miami, it's great, but chances are if you live in southern Florida, there's only one choice for insurance, unfortunately, and that is actually pretty much just like a government subsidized insurance company called Citizens. That is my insurance provider down there, Citizens. This is a cool view looking all the way down Madison. For whatever reason, there's a ton of traffic tonight. You guys see this all the way backed up? Kind of crazy. Joel PM, what's up? Says California should invest in nuclear to power distillation for abundance of water. Well, the good thing about the U.S. is that we do have abundance of fresh water. We have the Great Lakes and we have the Finger Lakes. All right, here we have some more vacancies. Now look at this, guys. I think this is the mother lode of retail vacancies in New York. You're seeing it live right here. Almost every single building on the block here at East 67th Street, all vacant. Boom. 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 I think that one may have somebody in it, but this one's vacant. So you have 1, 2, 3, 4. And this is a trend you're seeing. And again, I'm not trying to be doom and gloom. I'm just trying to show you guys the diversity in the neighborhoods here in Manhattan. Real estate is a very, very, I would say, neighborhood specific, particularly in New York. Because as I said before at the beginning of the stream, you have Soho with some of the lowest retail vacancy in its history. And that's actually really good news, right? Soho's recovered from the pandemic and more, and way, way more. Here's another one. Maybe we didn't point this out yet, but places like the Upper East Side really hasn't, because the neighborhood is, there's a lot of old wealth here. There's a lot of old money. It's not very fashionable and hip for, younger individuals. I would say, not trying to generalize, but it's just it's very intriguing to see the differences in the neighborhoods down here. I mean, I love the Upper East Side, but hey, Hermes Addict, what's up? Says that's right by Hermes. Did we pass it? We probably passed it. Hey, by the way, are you still in Miami? I think you said you moved to Miami. I can't remember if you were telling us if you were going to get a place in New York or not. I love the fire escapes on these buildings. Hey, Laura M, good to see you. Welcome. Marius State Farm is still keeping anybody insured with them. They aren't insuring anybody new. Yep, that's correct. Yeah, so in California, they're not doing any more new policies. But if you have an existing policy with them, you should be fine. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We usually go live starting at 8:30 p.m. Eastern, walking around New York and Miami. I think we're going to have enough time to take you guys to the Met, the Metropolitan Museum tonight, which is one of my favorites. We'll just walk a couple more blocks up this way. Yeah, Chinook Wind says all these commercial spaces benefit Amazon. Maybe. I think just retail in general is very difficult business. Very, very difficult business. I think e-commerce has really taken over in a big way, and obviously that shows. Wait for this light. Why would I go to the store, walk somewhere and purchase something when I could just go on Amazon and get it in one click and they deliver it the next day? Now, this is also something we saw in many of the earnings reports of some of the big box retailers. Now, I believe I was sick the week when Target and Walmart reported. Here's another vacancy here on the Upper East Side. Now, there's been a growing trend in major cities, and I think this is also important to talk about when we talk about e-commerce, when we talk about the Amazon effect, disruption in that regard. We saw from CVS, we saw from Rite Aid, the CEO of Rite Aid, and we also saw from Target on all of their earnings reports that shrinkage is a very big problem, and that's just another word for retail theft, right? I believe they use the term shrinkage. So what they've been doing, particularly in big cities, I'll give you an example like New York. If you've ever walked into a CVS on the island of Manhattan and you want to buy some soap, you want to buy some toothpaste, you want to buy ice cream, I couldn't believe it. I almost fell on the floor the other day. I walk into the CVS and I walk past the frozen food section, right? Just, walking around the store. They now even lock up the ice cream. It has a big, metal sort of chain, and it has a sign, a little customer service button. It says, if you wish to, purchase one of these products, please click this button and a customer service representative will come around and unlock the door, so to speak. And all of the deodorants, all the toiletries are kept behind this like plexiglass. Now, I think that's going to impact sales in a big way, right? And we talked about this before. I think it's appropriate to talk about it again because Target just reported and they're seeing more of the same thing. That creates friction in the sales process, right? So forget about the theft for a moment, okay? Let's pretend that the theft isn't a problem. That's not the problem. The problem is creating friction in the sales transaction. And Jeff Bezos, I believe he did an interview at Harvard Business School. And Jeff Bezos was talking about exactly this. He said, my vision for Amazon, right? One of the things that we tried to do is to run predictive analytics on why customers choose to abandon their cart, right? So an abandoned cart means, let's say if I'm shopping on Amazon and I, buy a sofa for my living room, I buy, some toothpaste and, one other item, a gimbal to do the live stream. What was the reason why I didn't follow through with that purchase and I decided to click away and not proceed? Well, what Jeff Bezos and his team found is that if you have more than 3 clicks, right? So if you have more than 3 things to do to purchase the product, the percentage of people that abandon the cart goes to 80%. So if you've ever noticed, if anybody's an Amazon Prime member here, or if anybody shops on Amazon, now it's just 1-click pay. So you preload your credit card, you preload your shipping address, you preload your billing address into your Amazon credentials, and now you don't even have to add the products to your cart anymore. All you do is click one button and you could expect it at your doorstep the next day. That's called reducing friction in the sales transaction, and that's why Amazon is so successful. So if you think for a moment that people are going to continue to go to the drugstore to get what they need, if they have to click a little customer service button and wait for the customer service rep to unlock what they need and then have to wait in line to check out, it's just a nail in the coffin. It's not going to work, and it's proven not to work. I mean, Amazon and Jeff Bezos gave you the blueprint, right? They gave you the blueprint of why customers choose to abandon their cart. This is another vacancy here. So I don't know, I'll ask you guys. I think we've done this poll before in the chat. Do you guys agree with that? Disagree? Do you think that sort of synopsis is a little bit overblown? Wow, look at these. The architecture here is beautiful. I guess the question is, are you more likely to just purchase those necessary items online on Amazon now if you have to wait for a customer service representative to unlock, the plexiglass? Jetstar says you agree. Elizabeth Gill says I agree. Adrian says very daunting to do, easier to access more sales. Yeah. Wow, JM says, yeah, I walked out from waiting. Really? So you actually had a personal experience where you clicked the customer service button and there just wasn't enough employees, so you walked out. Interesting. Justin S says, I prefer to shop local for a lot of things, even if it takes time to get everything. Now, I can understand and appreciate that, right? I think I would have a little bit more patience for like a mom and pop bodega or mom and pop pharmacy as opposed to a big US corporation, right? Like a Target, a Walmart, a CVS, a Rite Aid. I think I could subscribe to that. And I think I do have a little bit more patience, right? I think they deserve it. So I think that's a good comment. I agree with that. Troy Atman says, I don't trust Amazon with food. You know what? So multiple people have said that. What is I would say the department? Is it Amazon Fresh? We've been having a lot of bad reviews. Look at how gorgeous these townhomes are on the Upper East Side. Look at that, guys. It's unreal. Now, a lot of people have been expressing their concern about the Amazon Fresh. They're saying, you know, I guess that's the grocery delivery service. They're saying it's horrible. The food comes and it's sometimes rotten. It's not fresh at all. Maybe that's just growing pains, perhaps. Justin S. isn't Whole Foods owned by Amazon? Yeah, that is correct. Whole Foods, Amazon did acquire Whole Foods a few years ago. I think Whole Foods is fantastic, but it's just too expensive, particularly in Miami. Look at this, guys. This is probably one of my favorite buildings so far tonight on the stream. Look at that. Elizabeth Gill says, I am a small business shopper for sure. Lots of great small businesses where I live. I support a lot of small business coffee shops and things like that in the city. I think, you know, even if you're going to pay a little bit more for it, I think that's what makes some of the communities here in New York what they are. And it may sound, you know, kind of like a hyperbolic and cringy statement, but it's kind of true, right? Coffee shops are very important to the foundation of a neighborhood. You know, you see the same people every day. You know, you get to meet your neighbors and, you know, have a chat, sit down. At least the ones near me on the Upper West Side. Lemonade says it is expensive even in California. The Whole Foods is outrageous. Yeah, I don't know. I mean, something about the Miami prices are just too ridiculous. All right, I'll give you guys one more shot of some of the buildings here, and then we will make a left and continue walking uptown. This is Central Park, by the way. So this is Central Park on the east side. So this is Fifth Avenue that runs alongside the park. We'll check out what this restaurant is here. Joseph Hardaway says, I think small business coffee shops are some of the best in the world. I agree. Especially in New York. Some amazing, amazing places here. This place looks unique. This kind of looks like a small mom and pop shop. Look at that. Hey, Dusty Cole, what's up? This kind of looks maybe like a bar, restaurant, coffee shop. Closes at 10 p.m., so it's open late, which is good. Now, I'm not sure if that's a full moon. I think it's going to be a full moon tomorrow night. But the moon over Manhattan looks gorgeous tonight. It's a quiet night too, which is really nice. Elizabeth Gill says, shout out to Spot Coffee in Buffalo, New York. You know what? I'll take a screenshot of that. And if I'm ever find myself in Buffalo, which almost never I'm in Buffalo, but if I am, I promise you I'll go there. Hopefully it's more closer to the Niagara Falls area. All right, let me catch up on some of the comments, and then we got some more things to truck through here. Here's some more available space on the Upper East Side. Retired in Florida, says Tom, serious question for residents living in Manhattan, where there is no access to grass and only concrete. Where do the dog owners take their dogs to do their daily needs? Well, they just do it on the sidewalk, and then you're supposed to, you know, clean up after your dog. But again, we are here on Manhattan's Upper East Side, and you have one of the greatest parks in the world right here. This is the Apple Store, by the way. You know, we had a conversation about India's GDP growth tonight. India had a rock solid the GDP report. And last quarter, Apple actually opened up their first ever retail store in India, which is pretty exciting. This is the Upper East Side Apple store. I've never been in here, by the way, but you can kind of tell it's the Upper East Side Apple store with the sort of almost like a gaudy aspect of it. You have really nice chandeliers on the ceiling. You also have really nice crown moldings throughout. But look, I think, a lot of people think that way. They're like, you know what, I can never live in Manhattan because it's a concrete jungle, I need space. Look, you can have space in Manhattan, okay? If you live on the Upper West Side or the Upper East Side, you are mere steps from one of the most gorgeous parks in the entire world, Central Park. I've taken you guys there multiple times. And during the day, I really wish I could do a live stream during the day, but I can't, I'm working. The park is amazing, and in some parts of the park, you feel like you're not even in Manhattan. Hey, Haas Manning, what's up? The Garlicks is a very nice museum on the other side, free for CUNY students. Yes. Now, I think I've explained this before to you guys. This is one of my favorite museums in all of Manhattan. Now, there's a catch with this, okay? We are on East 75th Street and Madison Avenue. What you're looking at right now is called the Henry Clay Frick Museum, or it's called the Frick Collection. Now, this is actually the satellite location of the museum, while the actual museum, which is a couple blocks this way on 5th Avenue, right on Central Park, is actually under construction. So Henry Clay Frick was one of the big titans during the Industrial Revolution, multi-billionaire, and, well, in today's dollars, right? And if you want to visit the Henry Clay Frick Museum, the coolest thing about the museum is that it's in his physical house, right? So his mega mansion that has everything from, koi ponds in his house, it's just absolutely gorgeous. That is the main part of the museum. Now, unfortunately, it's under renovation. It's going to be under renovation for, I believe, 10-ish years. So they've moved all of the artifacts, all of the exhibits, 2 blocks north, right here on Madison Avenue and 75th Street, to this satellite location. Is it still worth it to go? Yes. However, the real reason why many people would want to go to the Frick Collection is to actually see the house, right, of Henry Clay Frick. So hopefully that construction will be finished sooner rather than later. Hey, Mothman says, born and raised, living in New York City all my life. It's not for everybody. Awesome. Richie says, I'm from Long Island, New York. Come on, boy. We'll wait till we pass the pressure washer guy. Hey, Smee Media, what's up? Hey, Richie, this is Tom. I'm from Long Island, New York. I can only imagine New York City cost of living. Yeah, well, I mean, Long Island's not too much, is not less expensive, really. I'm also a Long Islander myself, Massapequa. And it's really expensive to live there, too. The property taxes on just a regular entry-level home in Nassau County, you're looking at well over $10,000 a year, right? In some parts, like South Shore, Long Island, Oceanside, Island Park, these are really nice American flags here. Right on the canals there, some of those properties could come with, property tax price tags like 25 grand, which is crazy to think about, but it's true. All right, we have another retail space available here. Username schmoozername says, Tom, does Long Island, New York have a local tax like New York City? No, we don't. That's also another good point. This is a really nice Rolls Royce right here. You can kind of tell we're on the Upper East Side. Very Great Gatsby-esque. But you're right. You know, if you live in Manhattan, or I should say in the 5 boroughs in New York City, right? Brooklyn, Bronx, Queens, Staten Island, Manhattan. Not only do you have to pay the New York state tax, not only do you have to pay your federal income tax, but you also have to pay a New York City tax, which is another couple points. So it is expensive. It's very expensive to live here. But however, I think the trade-off is this. I truly believe in life, you get what you pay for. And especially early on in your career. Oh, this is the Mark, by the way. This is a beautiful building, nice hotel. I believe early on in your career, whether you're going into tech, whether you're going into banking, whether you're going into real estate, whether you're going to be in a trade, right? If you're going to be in a labor union, right? An iron worker, if you're going to be a heavy equipment operator, local 14, union of operating engineers. There's no place to do it like New York. It's sort of like you pay your dues because you get not only the best experience in the world, but the greatest talent pool in the world. Your coworkers are quite literally the smartest individuals on the planet. Okay, it's like being in the NBA if you come to the city to compete, Sri. The best and brightest, not only, but I think it's worth it, particularly if you're very early on in your career and you're trying to build something and build a very robust network. I think that's the cost of admission. That's sort of the way I look at it, or at least the way I looked at it when I'm still early in my career technically, right? But when I was a teenager, that's the way I viewed it. You sort of want to be where it's at. A country club costs so much money. It's not because people, love playing golf. Well, that's part of it, but it's really for the networking opportunities, right? You want to be around other like-minded, successful, and wealthy people. Oh my God, look at that pile of trash. That's the largest pile of trash we've seen yet on the Upper East Side. But the outdoor dining structures kind of look nice, though. Hey, Lorene Peters, what's up? Good to see you, Lorene. Hey, Ryan Bex, is my 15-year work anniversary is tomorrow. You were definitely young. Congratulations on that, by the way, dude. That's something to be proud of. That's fantastic. Man, and were you with the same company 15 years? That's awesome, dude. Congratulations on your success. I love hearing stuff like that. Troy Atman's like, great transition. I know. Look, New York City has its problems. Everybody knows that. Now, speaking of the I should say the sanitation problem, to be a little bit more politically correct for you guys, I believe New York City is launching a pilot program. I'll give you an example. You see this? This is a trash can. But they're the open air trash cans, which is a big problem, especially as you go towards Penn Station, towards Koreatown, and even further down. I think some nights on the streams, I've pointed this out, there's people that go into the trash cans and literally turn them upside down and throw the trash all over the place, and the filth is everywhere, the garbage is everywhere. So that's one reason New York City is launching this pilot program to containerize all of the trash. So I've been seeing this in Midtown. I saw a couple of them on the Upper West Side, and essentially what it is, it's sort of like this concrete structure with a big metal top, and they containerize all the trash so the trash isn't just piled up on the side of the road. Hopefully that'll cut down on the rat problem. You're not going to see it too egregiously here on the Upper East Side because the Upper East Side is very ritzy, but it is a problem. So the city is starting to do that now, where a lot of the garbage cans are containerized in the mix. Yeah, Richie says New Yorkers, tomorrow we're having our first warm weather day. It's supposed to get up into the 90s tomorrow, thank God. Love that. But anyway, so guys, we'll just do a quick review because I did just want to hammer home on some of these points. We'll take a look at this building. So as we know, we're now in June, okay? We're almost halfway through the year. And on June 13th through June 14th, this is when we are going to hear yet again from the Federal Reserve. We are going to hear from Fed Chairman Jerome Powell at the conclusion of the FOMC meeting. Now, if you look at futures markets, they're pricing in about a 35% probability of a 25 basis point rate hike at the next FOMC meeting. That is a little bit in contrast to what many of the Fed presidents are saying, particularly Neil Kashkari. Many Fed presidents are coming out and saying that the next meeting will have a pause in the hiking cycle, which will open the doors up for an additional rate hike in July. So it's possible that at the next meeting, we could have a little bit of a pause. So they hold the Fed funds target rate at 5% to 5.25%. That's where it's at right now. Additionally, projections for the peak rate, so peak rate, P-E-A-K, is about 5.5%. So that is what the market is projecting will be the rate where the Fed will stop hiking in and of itself, right? So once we get to 5.5%, we'll probably either chill there for a long duration of time. And that is one of the things I don't think the market is preparing for. Wow, look at this. Look at all of the ivy growing along the side of this building. That looks really gorgeous. I think that's one thing that the market isn't preparing for. It's very possible that the Fed hikes to 5.5%. Maybe we'll get there by Christmas. And then we leave rates unchanged for a year or two. That's a big possibility. I think that would definitely bring the economy to a screeching halt. Now, we got the PMI numbers out today. So if you go to the Institute for Supply Management website, today we got the manufacturing PMIs out in the United States. And yet again, we are in contraction territory. So the PMI reading came in at 46.9. Okay, this is the 7th consecutive month of contraction in the manufacturing sector of the United States. Look at this diner. This is one of the few original diners left in New York. It's kind of sad we don't have many of them anymore. This place is called Nectar. That sort of throws you back to old time New York, doesn't it? It's kind of sad that the majority of diners' days are kind of numbered here. But anyway, so we're seeing manufacturing activity roll over. And this coincides, and that's why it's so important to look at the PMIs as a leading economic indicator, because there's a high correlation between expansion in the manufacturing sector of the United States and GDP growth. And if GDP is growing, chances are corporate profits in America are going to grow. And if corporate profits in America grow, that means S&P 500 returns will probably be positive. So as traders, we could use these leading economic indicators as a proxy for our risk-taking in the environment. Now, these steaks really caught my eye. Look at this place. Has anybody been here? This place looks amazing. Look at that. My God. These look like dry-aged New York strip steaks. Would you guys say these are New York strips? I think those at the bottom are filet mignon. These are definitely New York strips, these guys right here. Those look awesome. Man, I've never been there. That place looks fantastic. Michael Joseph says Lobes. I gotta check it out. I'm gonna try it. That place looks fantastic, man. Yeah, Melissa 2087s has never seen that place before. I've never been in there either. Here's another vacant space here on the Upper East Side. Ren 1018, welcome. So does anybody have any predictions? This is sort of the last thing I got for you guys. Now that we're on 83rd Street, I'm very excited to show you guys the Met. We haven't been up here in a long time. So I'm gonna take you to the Met Museum. But here's my question. Tomorrow is probably gonna be the day that decides for the Fed whether they're gonna raise interest rates by 25 basis points at the next FOMC meeting, or they're gonna pause. And that is the non-farm payrolls that we're gonna get out tomorrow. So do you guys think that the non-farm payroll report is gonna come in hot? And do you think the unemployment rate, which is currently at 3.4%, I believe, in the United States, do you think the unemployment rate is going to continue to decline? Or do you think we're gonna get an uptick in unemployment? I'd love to know your thoughts, because we got a lot of economic data points that we'll go over here in a minute. Lorene Peters, got it. Just the Guys, that place that I just walked past sells $400,000 mattresses. Whew. My God, 400 grand for a mattress, jeez. Ryan Beck says one more vote for the Senate. Approval is imminent. Ren 10 says you think unemployment's gonna uptick for sure. Here's another vacancy here. Hey, SME Media, since summer is coming, I think unemployment will go down or stay the same. And let me read a couple more. Quec 12 says uptick in unemployment, I think. Eric says the Fed can't pause because inflation is higher than 15% and companies are laying off in droves. Well, that's not true. Inflation is not 15%. And you know what? We actually have some data to analyze about layoffs. And we got that data yesterday. So I'm trying to remember if I programmed this in the Nightbot or not. There's another butcher. Now, if you look at the job openings report that came out yesterday, job openings came in really hot. Okay, there are 10.1 million job openings in America today. That is up from 9.7 job openings in March. So I'm trying to play devil's advocate here. Okay, I'll read you the next data point and then we'll analyze it. The next data point is layoffs actually fell last month. Layoffs actually declined month over month. Layoffs fell to 1.6 million from 1.8 million the month prior. So the argument, someone would say, right, so one side would say, how is it possible that the Federal Reserve could even think about pausing rate hikes when we have 10.1 million job openings in the United States and unemployment rate is 3.4%, the lowest since the 1970s. And inflation is really sticky, that is true, particularly in shelter costs, right? So if you look at shelter costs, that is the number one metric, in my opinion, that the Federal Reserve should be using to guide them to whether they should be raising or not. Because if you really think about it, what is the number one expense of many Americans? Oh, look at all these dogs. Oh, that's funny. I guess the dog didn't want to walk anymore. But if you look at the number one expense of the majority of Americans, it's shelter costs. It's their rent, it's their mortgage. And the one specific, I should say, line item in the CPI report that we're not really seeing any material improvement in is shelter costs. It's a big problem. And energy, that's true, Dr. Longus, that's true. Now, we're having some progress on energy, right? Because crude oil is down all the way from $130 a barrel all the way down to below $70 now, which is good news. All right, we overshot the Met a little bit, but that's all right. Nina says, my prediction is that they'll raise again. Yeah, we'll see. I think it's probably 50-50. Yeah, Mothman says the prices of everything is up, but the pay of jobs is still leveled. That's the biggest problem. Hey, Brad's Brain says, I'm hiring in Houston. Need SVC techs and installers. Still a terrible labor market. Can't get folks even applying these days. Wow. So the labor market is still tight. So Brad's Brain, to sort of piggyback off of what you were saying, what do you think the correlation is there to labor costs, right? So if Brad's Brain, somebody in the chat, right, business owner, can't even get people to apply to be a technician, I'm assuming, what is this, HVAC you're talking about? What does that mean an employer is going to have to do to entice people to apply? Well, they're going to have to pay more. And that means labor costs go up. So what does that mean for the hourly rate that you're probably going to have to bill your customers? That's going to go up. And so that's one of the areas that Fed Chair Jerome Powell is looking at specifically is wage inflation. Wage inflation. Whew, we finally made it, guys. Welcome to the beautiful Met Museum on Manhattan's Upper East Side. We've officially made it. This is 5th Avenue and Museum Mile and East 84th Street. Beautiful views all the way to Billionaires Row in Manhattan. And the water fountains are finally turned on too. Remember the last time we came up here was during the winter. Hey, Steve Gonzalez, thank you so much for joining, my friend. Appreciate it. And enjoy your night. Let me try to adjust the brightness here. Justin S. is also where trade schools come in handy to help increase the number of tradespeople. Very good point, Justin S. And that's another thing we saw recently, I think yesterday. That was one of the main stories in the Wall Street Journal, is that we're seeing a record number of individuals, well, I should say would-be high school graduates, choosing to opt out of college. Right, we're seeing college admittance rates fall in a big way, and many people are choosing to opt for trade schools, right, or just not to go in the first place, which I think could be a positive, but also could be a big negative. But I think we're going to need to get more data on that, because I'm a big critic of college, but I'm also a very big fan. I think college, the data on college is indisputable, right? Even if you have some college, right, you don't even have to graduate. Just as long as you have some college, all of the studies show that you're going to make more money than somebody who doesn't have a degree at all or hasn't gone to college. Now, there's some anomalies, of course. Of course, there's statistical anomalies, 100%. But I think the main problem in the United States is the cost of education This is really gorgeous here with all these fountains. It's the cost of education and people going into debt to get, worthless degrees. And I'm not trying to say that to be a jerk and in a mean way, but there's not enough emphasis put on the students to say, look, you should major in something that's going to, garner you a very lucrative paying job opportunity out of school, right? Whether that is in the STEM field or something like that. I think that's one of the bigger problems. All right, what do you guys think about the Met? We haven't been up here in a long time. If you guys are enjoying our walk of the Upper East Side so far tonight, feel free to hit the like button and click the subscribe button if you're new, if you enjoy these walks and talks around New York City. Love the architecture on the Met Museum. Since we're here, I'll take you guys all the way up to the front door. Wow, Brad's brain says, Tom, you don't even need trade school in many industries. Often a new hire will be trained by the company to learn the trade themselves. That's a plus too, and I'm assuming they'll probably get paid. So you're getting paid to learn a skill. That's a win-win in my book. Now, what do you think it is, right? Because I'm more curious about the solution and what is the cause of this. Do you think it's because we've seen such a massive bull market in things like tech and in, financial, I should say fintech more specifically, and it's really been glorified, right? Everybody that graduates college wants to be the next Mark Zuckerberg. They want to take a tech company public. So the trades have really gone by the wayside, right? A lot of the kids nowadays are not opting to take over the family HVAC business or the family plumbing business, or the family, you name it business. I think that's going to create opportunity too for people to buy those businesses. Man, this is a gorgeous view. Dan Zhang says, Tom, did you start working in tech before you finished college? Yeah, I was an account executive before I graduated. But look, I think a lot of New York City kids, right, that go to CUNY colleges, City University of New York, it's a lot different, right? It's a lot different if you went to a CUNY school than if you went to, a college in the suburbs. Many people who go to college in Manhattan, in the CUNY system, they commute to school, there's no dorms, and then you go to work, right? So I went to class and I went to work. Now, there's pros and cons of that. I'm very fortunate that happened to me because I was able to build a network of people very, very fast. And I was able to make a very good living in college and beyond. But, the trade-off is you don't get that, I should say, normal college experience that everybody else gets. But, I'm not complaining. All right, I'll give you guys a little bit of a peek inside. They really don't like you filming in here, but just in case there's some viewers in the stream who haven't been inside the Met, this is a little glimpse of what it looks like inside. Really beautiful building. And I think if you're a CUNY student, you get to go to these museums for free as well. So it's open Monday, Tuesday, and Thursday, 10 a.m. to 5 p.m. And then Friday and Saturday, 10 a.m. to 9 p.m. And it's closed on Wednesdays for some reason. Oh, is that right, Mothman? It's haunted in here? What do you guys think? Not bad, right? Wow, J49, $85 admission? Are you serious? That can't be true. That can't be true, right? $85. No, no way. Maybe you're right. I don't remember paying $85. Yeah, there's no way. Oh, you're just kidding? Yeah, I was like, $85. I was like, that is a ripoff, man. No, but it's worth it. If you guys haven't been here, it's a must go when you visit New York City. Also, additionally, I'll say this. If you cross over to the other side of the park, on the Upper West Side, that's the Museum of Natural History. I believe they just opened the brand new exhibit literally 2 or 3 weeks ago. Now, what is that? The new planetarium, I believe? I haven't been, but I may go there this weekend if I could find the time. Hey, San Miguel, what's up? Good to see you. Audra Henderson is here. Thank you for joining us. Trust you're well. Hayden Planetarium, it's the new wing. Maybe I'll check that out. Jeez, that was loud. Maybe I'll check that out over the weekend. Dan says, Tom, did the company you work for at the time care about the fact that you hadn't finished your degree yet? No. So at the time I was working for a major telco, a major telecom company. And they were actually helping me pay for school. It's called a tuition reimbursement program. So they were actually accommodative to a point with allowing me to go to college. So the way it would work is you would pay the money for the semester, which in the CUNY system was pretty much nothing, right? To give you guys an idea, now that we're waiting at the red light here, if you're an in-state student, right? So if you're, born and raised in the state of New York, you get in-state tuition for CUNY, which I believe at the time was like maybe $2,500 a semester, something like that, $3,000. Anyway, you get the picture. And that was like really affordable, like really affordable in comparison to like NYU, where it's 70 grand a semester, or 70 grand a year. I apologize. So the way it works is you pay the tuition, and then if you got higher than a B+ in the courses, you're eligible through the company for tuition reimbursement, and then your boss would just sign off on it. But you had to get greater than a B+. And I would advise that to people, right? If you're in college, look for tech companies or telecom companies that have these college programs, right? They will help you pay for school. Many big companies do. I know Salesforce does for sure. I think Mark Benioff was one of the first sort of tech CEOs to start that type of program. So I know there's a lot of like Salesforce administrator roles I think rising sophomores, it's called. So what does that mean? Sophomore going into your junior year. And they'll help you pay for, I think they're lacking in the enterprise section a little bit. But I think that'll be a topic for another night. I used to deal with a lot of those TEMS. So a TEM acronym for the telecom, an endpoint security management software. You need one concise portal to go to manage all of that. And it needs to be open to integrate with Workday, which is a major HR piece of enterprise software. It needs to be open to API into Salesforce. T-Mobile doesn't have that capability yet. So I think they should be investing heavy if they want to gain market share in the enterprise space into making their portals like Verizon and AT&T. They're killing it in retail, but I mean their portals and their platforms are just, you can't use it at the enterprise level, in my view.
So I would pull up to the main campus and just chill around waiting for somebody to pick me up.
I think it was a little bit of a buffer zone. Hey Robert, what's up? I think we should be back now. Tons of scaffolding on this street. Yeah, so Dan's saying that was actually a big issue. And I ran into a lot of problems with that, particularly with the language classes. So for whatever reason, CUNY schools do not allow you to take a language online. And it was a big problem for me because they only offered Spanish right smack dab in the middle of the workday. So that was a problem for me. And, I had to make a choice. Do I, quit this really lucrative job and to take Spanish 101, or do I continue with my career? So yeah, for whatever reason, the CUNY systems are not, well, they're probably flexible now with COVID, everything is online, but at the time when I was there, you weren't allowed to take language online, which is crazy. All right, East 73rd Street and 5th Avenue. I'll take you guys back to 59th Street, and then I gotta jump on the train. Oh wow, Ken Brockton, that's awesome. Ken says tuition reimbursement is invaluable. I had to get a C or better in classes for my information technology degree. That's awesome, man. Yeah, and a lot of college students don't know about it. Because people are like, focus on your studies. Focus on your studies. And they choose not to work. I would take the opposite side of that trade. I would focus more on work and put school on the back burner a little bit. Now that doesn't mean you be a total derelict and you fail everything. But if I could work through college and make a lot of money and get tuition reimbursement and then maybe get a B+ in the class instead of an A, I'd take that trade every day. Right? Because you're going to get a better education in the business world, right? learning from your boss, learning from, your coworkers, learning how to do deals. That's the real world. So I would take that trade all day, every day. Hey, this is the Henry Clay Frick Museum. So this is the actual house of Henry Clay Frick. Unfortunately, it's under construction. But if you remember earlier in the live stream, we showed you guys the satellite location, but this is the actual home. Hey, Hang with Mark Mom, good to see you. Thank you for joining us. We're about to wrap up the stream right now, but I think we had a really good conversation tonight. We talked mainly about the Federal Reserve's next FOMC meeting, which is June 13th through the 14th. We talked about the China PMI numbers that came out. So manufacturing activity in China continues to decline. We talked about our bull thesis on India, because we got India GDP numbers in, which came in way above expectations, and the central bank in India actually raised their guidance for full year GDP estimates for this year. Last year they had higher than 7% GDP growth. And tomorrow's the big day. Tomorrow's non-farm payrolls. Tomorrow is when we get an update on the unemployment number, or I should say the unemployment rate. So it's going to be a big day tomorrow. They have all these police barricades up here. I'm trying to figure out why.
And I said, but I just really don't want it to be that.
Hey, Boomer, thank you so much for your very generous $1 donation. So I think I'll end it right here, right outside of the Sherry, Netherlands. If you guys enjoyed the video tonight, feel free to leave a like on the video, hit the subscribe button if you're new. I'll see you guys tomorrow in Chinatown. We are going to be in Chinatown tomorrow starting at 8:30. I'll see you guys there. And I'll end it off at the Sherry, Netherlands. So thank you for joining Gary Carpenter, Jonathan Earl. Appreciate it. Ryan Beck. As always, Lori, thank you so much. Nina, Elizabeth Gill, Jay Grant, Richard Vogel, Justin S. Everything Miami, good to see you, sir. Hopefully you had a good Memorial Day. DM, thank you. Hang with Mark Mom, Robert, Dusty Cole, as always. Thank you, Dusty Cole. Abdullah, Muhammad, thank you. Stefan says, I love your streams. I feel like I'm in New York. Thank you, Stefan. Appreciate it. Joan K, Austin City Limits. Stephen Bate. Bree Grams. See you guys tomorrow. Take care. This happens from time to time. My screen is frozen. All right, I may have to turn off my phone. I feel like this happens from time to time, doesn't it, guys? I feel like this happens maybe, what, once every couple days? No, not every couple days. 4 times a year it happens, mainly in the winter. All right, let me see what I can do. I think I'm gonna have to reboot my phone.